A bad credit score is effectively a hidden tax on your life. It can mean the difference between a 3 and 4% mortgage or getting approved or disproved for a credit card, costing you thousands of pounds over your lifetime. In this video, I'll be giving you the exact checklist to improve and fix your credit score, and I'll be telling you my secret at the end of the video on how I've managed to keep my credit score extremely high. Firstly, as you can see, my credit score has jumped around the 900 to 999 range for the last 4 years now, ever since I've had a credit score. But I've been keeping it above the 950 plus mark for a very long time. And this didn't happen on accident. I've spent a couple of years trying to figure out the best way to keep my credit score high without having to put in a ton of work, really. And I'll reveal at the end of the video what my secret is to keeping my credit score this high. So just before going on to the checklist of how to improve your credit score, I just want to go over the recent shakeup of the credit score system in the UK. So if you didn't know already, the credit score for many decades has been 999. This was effectively the highest credit score that you could possibly achieve, but now that is actually all changed. In the last month, Experian has changed the credit score system from 999 to 1,250. When I got the notification from Experian saying my credit score has changed and I want to check my monthly checkup, I was not expecting to see 1,250 as the credit score. I didn't really get any heads up or any email about this happening. It just happened. Now, Experian is basically saying that this is to reflect the current UK and current economic climate. And what this means is that because there are so many economic and financial instruments out there, apart from just credit cards and mortgages, in the last few years since the credit system has been created, there is brand new forms of credit like buy now, pay later, pay in 3 credit cards, and a whole host of other financial services that just didn't exist a decade ago. And you might be one of those people who had a credit score of 999 or an excellent credit score, and it is now considered just a very good credit score because these credit companies didn't reflect your previous number and they kept it the exact same. So you now have to work and get your credit score up to the 1,250 mark. Let me know down in the comments, did you see your credit score change overnight? And is your credit score still within the very good or good bracket? Me personally, I was very proud of having an excellent credit score, but it is now very good and I am determined to get this back up to the new number. Now that we have the new change out of the way, this brings me on to the first point of how to improve your credit score. And this is firstly registering to vote. Now, I know this might sound like a very strange one, but there are many people out there who haven't registered to vote or aren't on the electoral system. You'll get an extra 50 points added to your credit score if you register to vote and put your name on the correct address. Many people don't know this, but the credit agencies are looking at electoral information alongside with lots of others. And if you are currently not on the register to vote system, you're effectively losing out on a potential 50 to 75 credit score. This isn't about politics. This isn't about identity verification. This is just trying to prove that lenders say who you are and that you are not trying to commit fraud. As on their data sets, they might see you as a ghost lender and may not be able to give you the highest credit score that you possibly can. If you haven't done this already, it is very easy. You just go over to the government website, register to vote, and then once you've added yourself to register to vote, it will be registered and reflected on your credit score about 8 weeks after doing it. Very small change, but you're able to get an extra quick credit boost. This brings me over to the next point of fixing errors on your report. What I mean by this is being able to clear up all of the data within your report. For example, you may have switched around and moved at different addresses over the last 5, 10, or maybe even just a few years. And those addresses may still be reflected within your credit score app. Experian, ClearScore, Equifax, they all keep a track of where you've lived, especially if you've changed the credit card address from one place to another. Now, this isn't necessarily a bad thing of having multiple addresses, but it's a very easy thing to clean up. You just go into your credit score app, you go into the settings and check your credit profile, and you may see more than one address there. If that more than one address is somewhere that you don't live anymore, you can file a notice of disassociation with the credit score agency and effectively get that address removed from your account. Not only this, but one of the things that I like to do, and I use the Experian app, is when you go inside the app, you are able to see all of the different types of credit that you have. This may be mortgages, credit cards, buy now, pay later, any type of loan you may have. And inside of there, you're able to see some debit and credit cards that you perhaps don't use anymore. For example, if you have a Barclays debit card, this will actually show up on your credit report as you are able to go into an overdraft with this. So it shows up as a form of credit. If you have a lot of debit cards, credit cards, buy now, pay later services that you are perhaps not using anymore, then this is the perfect opportunity to go in there, check what is being calculated on your credit score each and every month, and perhaps go in and close these accounts down. I will get onto a point later in the video about keeping accounts open. However, in this case, I would definitely recommend if you have only had these accounts open for a few years or so, then don't shut them. However, if you've had them for 5 or 10 years and they're just no longer being used, then it may be a good idea to shut them down, just because it will be much more easy to understand where is all of the information flowing into your credit report. And then not only fixing these mistakes, but if you have lived with a partner, maybe your girlfriend or boyfriend at some point in the past, but you now no longer live with them and you've separated, you may at some point in time have created a joint account, or perhaps you would open a credit card on both of your names. You can also request that those ones be disassociated with yourself so that they are no longer being tracked against your name. And this brings me over to the next point of pay on time every time. This is one of the most important factors that you can do. You need to be paying your credit card off each and every month. When the statement balance comes in, you do not want to be leaving a penny over. Not only just because you're going to be paying interest rate, whether you have a 30% or 600% credit card, but one missed payment will stay on your file for 6 years. And this doesn't necessarily really negatively affect you, especially if the balance is very low. However, when you're applying for a loan or a mortgage, all of this data is publicly available for those brokers to access. And they will be permanently judging you on your evaluation and how worthy you are at paying that loan back. So the easiest fix for this is to just set up a direct debit on your account and make sure that it is paying it before the statement balance goes in. Each and every month, the whole balance. You do not want to be paying the minimum balance, because you're going to be getting absolutely screwed over by the interest rates, and that will be feeding back into your report, and your credit score will start to drop in just 8 weeks once they've registered it. Direct debits are your insurance policy for forgetfulness. So always remember, pay on time every time. On to the next point of keeping your credit utilization low. Now, what do I mean by credit utilization? Well, effectively, if we take an example of you have a credit card, you've just applied, and you've now been given a £1,000 credit limit. Now that you have that £1,000 credit limit, you go out and spend £900 on that card. That means that you have used 90% of your credit utilization. Lenders really hate hungry borrowers when they are spending the entire amount of their credit card each and every month just to struggle and pay it back over a few months at each and every time. To the lenders, this will look like you are struggling and that you need their money to survive each and every month, therefore withdrawing the trust from yourself. The magic number here is 30% credit utilization. You do not ever want to be going over that 30% mark. So if we take the same example again, we have £1,000 credit limit. You only want to be ever going up to £300. This is just a very strange unwritten rule that is baked inside of the credit agencies. And it isn't something that they tell us. This is something that has just been known over many years. But in order to keep your credit score going up and not going down, always utilize under 30% of your credit limit. And not only your credit score going up, but this is going to make your stress go up as well if you are using almost the entire balance of your credit card. Over to the next point, and this is withdrawing cash from your credit card. This is a massive red flag. Do not ever withdraw cash from your credit card. I wouldn't even recommend it in a total emergency. When you withdraw cash from a credit card, you're effectively telling the lenders, hey, I have no money and no savings, so I need to withdraw cash directly from you. It is a lose-lose-win situation. You lose out on your credit score, you lose out on the high interest payments, and the bank wins from you paying. Most credit card companies charge you a fee when you withdraw cash. This is often upwards of like 12.5 to 15%, just on top of the cash payment that you withdrawn. Not only that, but you also get charged interest on that. And this doesn't apply during your no interest free periods. What I mean by this is when you apply for a credit card, they often give you 6 months or 12 months of no interest period. If you withdraw cash, this does not apply. On your credit score, if you withdraw cash, you won't see this as an added extra amount of money on your statement balance. On your credit card, they see this as a cash advance. And with the new 1250 scoring methodology, this penalizes you even more than it did before. So only withdraw cash during an ultra emergency, and don't do it just for a leisurely activity. Over to the next point, and I think this is one of the most important ones, of limiting new applications. So every time that you put in an application to open a new credit card, whether that be through the mail, scrolling on an app, or doing it on a website, it all works the same. It leaves what the credit industry refers to as a hard search. And this will appear on your file. If you do too many of these, it will make you look really, really desperate, and that you are trying to frantically open as many accounts as you possibly can in order to have the most money as you possibly can. If you already have a credit card and perhaps you're looking for a new one, try to use the credit eligibility checkers instead of doing an entire search, just because this will do a bit of a soft credit pull rather than a full hard one. I would say that it's best to spread out these credit card applications, loan applications, whatever it may be, over at least 6 months. And on top of this, even mobile contracts can be considered a hard search. This swiftly brings me on to the buy now, pay later soft credit searches. So what I mean by this is with buy now, pay later services, you may have heard that they do a soft credit pull. Unlike a credit card, which does a hard credit pull, the buy now, pay later services just pull a small amount of information and shouldn't affect your credit score that much, perhaps by 10 points or even no points if you have a high credit score. But what most people don't know is this isn't just for creating a buy now, pay later account in which it does the soft credit pull. This statement and the amount of money that you have on your buy now, pay later app appears on your credit report. You can check this right now. If you go ahead and open Klarna or ClearPay or whichever one that you use, and see that you have a balance of, let's say, £100. Then go into your Experian app and check into your credit report. You'll be able to see the balance that is still due for your Klarna or ClearPay account. When you're taking out this amount of credit, you need to be thinking in the same mindset as a credit card. Should you be taking out an incredibly high amount of money on these buy now, pay later services? Because there is also a limit in which the credit score companies see you taking out buy now, pay later services with 1, 2, 3, 4 accounts and racking up thousands of pounds in these pay later services. If you perhaps have 2 or 3 accounts, all with £200 on each, this means that you are using £600 of somebody else's money. And the credit score companies, they can see this information. And then if you miss payments on these, you are not only going to be penalized by the buy now, pay later services, but the credit score agencies will also make your credit score go down. So in order to keep your credit score from going down and make sure that it is continuing to go up, you want to be very mindful of how much money you are actually using on these buy now, pay later services. Because for most people, they just take them out left and right and don't really think about it. And this brings me over to the next point of keeping your accounts open. Now, I know at the start of the video, I mentioned that you should close these accounts that are unused. However, I did say that these should be closed after 5 or 10 years of no use. But what I mean by keeping these old accounts open is that credit agencies love to see when you've had a credit card or mortgage or loan that you have kept open for 5 or 10 years. They want to be able to have access to a comprehensive history of your entire last 5 years of credit life. And that perfectly then matches you what the credit score should be. And not only this, you shouldn't be closing credit cards too early. If you have just opened a credit card, let's say in the last 6 months, but you decide that you no longer want to use it and you found a better provider, because you have such a small credit history with that card, the lenders don't like this and they like to see a long and fulfilling credit history in order to keep your credit score going up. And when you close a credit card, you also have a negative credit score impact just from closing it. This isn't a huge amount of points. This is probably in the range of 10 to 40, depending on how you close the account. But if you do close an account, make sure that it's been open for many, many years, 5 to 10 years of history, and never ever close a credit card with a balance that is still on the card. What I mean by this is if you have a credit score of £1,000 and you still have £50 to pay off on that card, and you go ahead and close it and pay off the last bill, this can really impact your credit score, as it will be seen as you closing the credit card with money that you haven't paid back yet. You want to be paying all of the money back first and then closing the credit card if you really need to. But if you are opening a credit card, plan to open it for the long term, at least 5 years. This brings me on to the next point of using credit score boosts. For example, on Experian, they have something called the Experian Credit Score Boost, and you can go on there and click the boost button, and effectively they might give you 30 to 50 points of credit boost. The way that this works is it uses open banking to prove that you are a responsible person. And this brings me over to the last point of my secret for keeping a high credit score. So for the past 5 years or so, I have had a credit score in the high 900s all the way up to 999. And I use this very simple method in order to keep my credit score extremely high. This is something what I like to call the £20 move. So personally, I don't really use a credit card a great deal. I have one open, but I don't really use it on a day-to-day basis, just because I know that it can lead to overconsumption and accidentally spending too much of the money you don't actually have. But what I do is I normally spend around £20 on my credit card. This is an incredibly low utilization for my credit card that has a very high credit limit. I leave the £20 to sit there until the statement balance is due sometime towards the end of the month. From here, when I get my statement and I'm able to download it to the PDF, I can see that my balance is £20 on the credit card. Now, firstly, I pick £20 because only spending that amount is not going to affect my credit score whatsoever when the statement balance comes in. From here, that statement balance of £20 is given to the credit ratings agencies automatically, and it is fed into my file. And I know that it takes around 2 months for anything on your statement balance to appear on your credit score. So for the next month that comes along, I pay off the £20 for my credit card, and I make sure that the statement balance is at 0. And this is something that I did in my early days of getting a credit card. Once the statement balance is now 0 in month number 2, it sends it off to the credit agency and feeds it into my file. What this means is that the credit agency can see that I've spent £20 and put it onto my statement. And then from the next month, they can see that it is now £0 and completely paid off. I found that when I was doing this, every single 2 months. So £20, £0, £20, £0, on off. This shows the banks and the credit agencies that I still use my credit card, but I do not rely on it whatsoever, and I don't pay any interest. This recurring amount that was on my statement balance to the credit agencies and then going from £0 to £20 to £0 to £20 improved my credit score from 910 to 999 over the course of around 8 months. I then stopped doing this just because my credit score was at the maximum it possibly could be, and now I just let my credit card statement balance always be £0. So that is my secret of how I improve my credit score by almost about 100 points. And I personally thought that this was a really good one to do early on without having to get into massive amounts of debt. I didn't really want to do this same type of method with hundreds or even thousands of pounds. But yes, I really hope that you learned something in today's video and that you can apply these skills, techniques, and methods to your own credit score. If you really did like that video, please make sure to hit the subscribe button and give the video a like. YouTube recommends that you watch this video here, so go ahead and give it a watch. Let me know down in the comments, what is your credit score? Thanks, and I'll catch you in the next one.